Hi everyone. Thanks, Paul. So yeah, we've basically been around for the past 6 months. We've deployed 3.5 million FIL to storage providers to directly onboard data. We just deploy to storage providers onboard data. I mean, we don't do like any kind of product that doesn't mean like on actually pledging for onboard data. Our service runs on the Anchorage custody app. So basically what it means that Anchorage provides the custody of the owner addresses. So basically it's basically what our kind of holders require, which is qualified custody. Also we do compliance checks, due diligence, KYC on the storage providers. Then we basically do a report about the SP, about the deal. We share with the holders individually. So individually, each one of them gets the report. They get to know the SP, so it's full transparency in terms of the portfolio. And then each investor actually gets to decide if they want to do it or not, that specific deal with the SP. So it's transparent because you actually know the storage providers you're backing. It's flexible because you get to decide on your portfolio. It's a very active management of your SP portfolio. And it's safe because we use Anchorage stack, basically. Kev, you want to add something to that?
No, I'll have questions for Kevin for sure, because I know where he's coming from. So go ahead, Hyunsu, just give us where your overlap might be and where you might differ on some of your lending principles.
I think Diego did a great job kind of covering the framework for how to approach it, especially from an institutional perspective. My name's Hyunsu. I'm from Dharma Capital. We're a swap firm, investment fund registered with the CFTC. Launched the Filecoin asset use product kind of first to market in 2021. Had the pleasure of working with a very broad global ecosystem of storage providers, really seeing how things have evolved and changed over time as the network has, gone through its ups and downs, and just hoping to kind of use this time to go over kind of the pain points and how we can kind of improve the way we provide accessibility of FIL to storage providers.
Okay, I'll take that. That microphone may have gone off. Okay, we're back on. We're live. Okay, so things have evolved probably quite heavily in, I think, the last year in my involvement with Filecoin. So take this question, and I know you're new, but even in 6 months, and actually let's start here. What's your approach to lending now versus then, or then versus now, however you want to say? So there was, day zero, and now we're at day who knows what. But even your assessment of the SPs has likely changed. So give us more of that.
Yeah, great starting question. I mean, when we started this, we had so much excitement around the ecosystem. I think the launch of the FIL Plus kind of 10x initiative really accelerated the price. And so it made things very challenging for storage providers to participate. And so I think general FIL use products were very valuable. And we focused a lot on quality teams that were trying to productize this, and I think we were a little bit too early in terms of actually having the tooling or the SLAs or kind of things that were ready to onboard enterprise or real clients. Fast forward to today, we've unfortunately seen a lot of the, call it, teams that were trying to really turn this into a business exit, and in terms of kind of like being a fiduciary of assets, we have to deploy them because we had them under management. And we've had to turn more to teams that are just focused on, quite frankly, mining FIL. And so I think we are kind of at the crux of, do we have enough of the tooling and making this into a real product? And I think if we can see that, plus a low price of FIL where it's at today, potentially a rebound and these teams returning, and that's what we're preparing for, is making sure that everything around our product is ready to kind of accelerate as quickly as we did back in 2021.
And add to that, how are you, so there's existing SPs, and then how do new SPs find you? Add that as just a counter question as well, because sometimes, they come to us through a funnel and like connecting to them, but are you engaged in active outbound as well?
Yeah, I mean, we've tried to be as active as possible, like towards the community. I mean, of course, coming to the events, participating in the weekly talks, that Paul kindly hosts. I mean, we are there. We approach the SPs. We are pretty active on Slack. Not active in terms of like posting and everything, but we are really we pay a lot of attention like to what SPs get to post, and it's true that, I mean, yeah, you said like we're quite recent. We started like 6 months ago, but we actually see some trajectory in terms of, and to your point, we are really pushing towards like the bottleneck for storage providers today is getting paid deals, right? So enterprise customers getting more cash flow beyond block rewards, get some stability, get some size, and do this on scale. And in my personal take is that we're basically probably asking too much for SPs like to perform. Like they have to do sealing, they have to do storage, they need to get liquidity, they need to get the FIL token to deploy. I mean, that's kind of like the friction that we're breaking here. But then they also need to hard sell storage to enterprises, right? And it's basically what I've assessed here in the market is that we actually, as lenders, we can actually help them on this task of getting enterprise customers to trust another party that is not like, basically it's because SPs that don't run, in my opinion, or some of them do, but like the majority, they don't run like a face client service, right? So it's hard to sell storage. And I think we, as middleman, as enablers of the community, we can actually help there because we come with trust. We both play Haven and Darm. We are regulated companies. We follow like very strict compliance jobs, and it's something that it's valuable for enterprises to actually trust the SPs because the primitives are there, like the IPFS, Filecoin, IPC. Like the bases are there. We just need to get this trust out there.
Perfect. Kevin, I'm going to ask you a long-winded question because you've come from really a couple different roles, but specifically, what does it look like now just being in a narrower swim lane versus seeing the entire ecosystem as you saw before and having to solve those problems? I mean, what's different? I mean, you're in one of the biggest OpEx, CapEx, however you want to look at this, for an SP is the FIL lending portion. So what does that feedback loop look like now versus prior when you were solving technical problems? And now you're literally, this is a financial problem.
Yeah. Before I've spent the last 2 years focused on Filecoin Plus program and helping support there. And since shifting over now, I'm reaching out and connecting directly with SPs to help them. We're becoming incentivized on the demand side. Like our investors are looking for the long-term growth of this network. So we need to help find projects and promote and build demand that way. I didn't have to deal with that before. People just came looking for data cap and I was helping in that market, but now it's totally different.
I mean, the one thing I've heard from Dharma before is that we're long FIL. Like you are in a long position all the time, right? I mean, you have your hedges, I understand that, but it's very interesting because every lender is very optimistic because they have to be by the nature of the business that you're in. But I do want to talk about that. I mean, when it comes to really, I mean, you come in, you're negotiating a rate. We'll call it the FIL central bank rate that you then add a margin on, or the FIL LIBOR rate, whatever we want to call it. How are you? Is there? I know the baseline rate. We can call it 50% just as an easy number. We could also call it less. Like, how are you assessing that from an SP that might be new versus old? I mean, obviously, an existing borrower is going to have a little more leverage with you and proof. But when a new SP comes in, or a new SP that you've assessed, is it just a hard number, or is there a lot of pushback on the number? Because I hear it on my end, right, is that either these costs are, either I hear it's too high or I don't hear anything, meaning to them, the math worked out on their model. So let's just go down the line on that and how you're coming in with those rates, because it really does come down to the math at some point, because you're competing in a commodity market in some respects, minus whatever tech principles you've built.
Yeah, it's a very interesting question. So I think there are two components in terms of the terms for SPs. You mentioned one, which is what's the yield or like even if it's fixed or if it's variable, if it's like a percentage of the block rewards, if it's like a rev share deal or a fixed deal. Nowadays, like everyone is doing a rev share deal. You said 50%. That's basically I think it's the standard one. But the other thing is how much does we as lenders require as collateral, right? So it's the second most. It's a second very important. They're basically the two components. It's like the rev share percentage and the collateral. On the collateral side, we basically, and we're very upfront with service providers there, which is, look, we have studied slashing fees, slashing events, probabilities. This is how much we require as collateral, which is like 5% initially. Then it you can actually grow there until like 11% with the rewards you earn, and that's it. That's basically, it's as low as one can get, right? So if you are below that, you're basically at risk, or the investor tokens are at risk. So there's no huge leverage there. In terms of the rate, it's really like, we all have, Glyph is a big market. It's kind of like seen as the, I would say the benchmark for investors, right? So if you go to an investor, and in our case that we actually present the deals to the investors, and you present, like, for example, a yield, like a deal that yields like 7 or 8%, you're going to just say, yeah, I'll just use Glyph. Or, it's kind of a benchmark, right? So Glyph works really as a benchmark. But to your point, like, it's true, it really depends on if it's a new SP or existing SP. We actually tend not to make that distinction. We have back new SPs, existing SPs at the same rates.
So just, I guess the point you're saying is like Glyph is the FIL funds rate.
Yeah, I would call it benchmark.
The Glyph rate, right?
Yeah, it is. Yeah.
Yeah, take that.
I think you made a lot of good points. Yes. So it's like, if for one of the main considerations that we have, whether it was fixed rates at the beginning versus revenue share, we always want to come to an investor with something that's like, call it at least 150, 200 bips more significant than Glyph, because with them, you're getting, barring smart contract risk and so forth, you're getting more liquidity as well. Like, you're able to kind of go in and out, or you're able to, make decisions on your position. Whereas I'm sure it's kind of the case with you guys, is like, once you're staked, you're locked in for, call it 52, 78 weeks. And, whether it goes parabolic or it dumps or it just stays the same, you're not able to really do so much with the FIL, right? Once it's locked. So we consider that. The other thing that we've looked at in terms of new storage providers coming to participate is, the general kind of network parameters and how they've always evolved, right? Pledge has fallen. So you could also say that net, the actual return on FIL has increased just because of the amount of total capacity available and how much you're sealing at what time. So we actually see that as a good opportunity for new SPs to join, because your effective rate can be higher. We also think that, with stuff like super seal, remote retrievals, remote sealing, and so forth, it is a better time. But I think it's also a question for these teams that have been burned, in the year or two of just participating in this, is like, do we want to do this anymore? Some of the things that we hear is like, if you're a team that has storage hardware, it's like Filecoin is still pretty much the best, network to participate in. And I think it's something that helps us maintain the lead. But outside of that, I would say that, we're really relying on aggregators, teams like dStore, Akave, and so forth, to help bring in these paid deals and ease the burden on the storage providers, for everyone, on just the FIL rewards. And then as that happens, the way that we had looked at it from the Dharma side is, how can we use real paid deals, much cheaper participation OPEX and CAPEX, to also increase yields for investors, to then kick off another flywheel effect of, hey, the yield's just not 9 to 11% anymore. It's actually like 18 or 20%. And then from the investor side, you now have significant tailwinds to participate. But what we've seen the past year or year and a half is like, oh, all the metrics are going in one direction, and we don't want to go in and lock, when it's like very unclear. So again, if we have a turning point in the ecosystem, we think that everything can again have more of like a virtuous cycle effect compared to the other way around.
Perfect. I'm going to go to Q&A, but at first I want to hand it over to Kevin, because I do have a question about, so Kevin, when you came from some of the work you did before, I even know this from being in the ecosystem, like, I don't have insight into the SP operations as well as I would like, because they don't have to give it to me. But now you're in a position where, say, I need to see everything, right? You need to see everything down to the data center bill, proof of location, proof of banking. You don't have to go into length, but maybe at the high level, like what are Haven's principles on the KYB side, for people that might be watching, or we can use this video at a later date to say like, look, if you're going to get into this ecosystem and you're going to spend $5 million, and then you're going to come borrow $1 million FIL, like what is it going to take? Like what do they have to prove? Because I think that's very important, because I think we've all gotten better at ensuring we have somewhat of a baseline standard here as to, the data center contracts. Is there a lien against the hardware? Is anything past due? So just high level.
Yeah, high level. Both sides go through sort of KYC, KYB check, the investor side as well as the SPs. On the SP side, it's obviously more where we need to know more about the leadership team, the founding team. Someone needs to really prove that they're connected to all of the operation that is running, where they're located, where the data centers are. Those types of things are all incorporated into that. So yeah, that's pretty high level, like straightforward. What's required? I would say the other diligence now that we're getting into is, to your point, like we need to know what the SPs are up to. Okay, what have you done in the past in the Filecoin ecosystem? Who are you planning to work with? Do you have access to data cap? Do you have projects that you're actively working on, or are you just hoping to find something out there? So, and as I mentioned, our investors are interested in supporting strong projects, things that they're looking forward to seeing on the network. So, we're asking SPs these kind of questions as well to see what they're up to and where they're planning to, what they're planning to store, and who they're partnering with, those types of things.
Yeah, and I think it's probably fair to say that these are not $100,000 operations, right? I mean, the CapEx on many of these SPs is in the millions. The OpEx is in the $30,000 to $50,000 a month just on the data center bill. So these are very large operations. I'm actually going to ask if you have any questions, just because there is one person in the room that touches a lot of FIL, so he may have a question. I'm going to turn it over, please.
You guys mentioned that there were a lot of SPs that left. Do you have enough demand for your FIL, and you're not lending just because you don't want to reduce your lending standard, or is there not enough demand in the first place?
To go to Haven first on that one.
Yeah, it's a very interesting question, because it's actually, we've been around for 6-7 months, and it's clear that today there's more supply than demand, right? Or demand that you feel comfortable after getting all the risk, after getting all the assessments, that we take the decision that, we want to partner with this storage provider long term. We want to give them $1 million, $2 million FILs, which, if you think about it, it's like $20 million, right? It's a large commitment from investors and, of course, of the risk. And so basically deploying FIL is a harder job than it was probably 2 years ago. And as I said earlier, it's our job to actually drive demand as well, right? So we cannot just sit tight and say, like, we have FILs, who wants FILs, right? And let's see, of course, going through the risk assessment, but it's not enough, right? Because you cannot actually do it on scale if you behave like that under this context, which is where are the paid deals, right? But if they're there, we want to add this trust layer that enterprise clients require, right? So that's why we partner with Anchorage. That's why we are a regulated company. That's why we do KYC, AML, to show actually storage clients, the ones who have the data, to feel that, I want to pay dollars for the SPs, not for us. We don't need the dollars from customers, right? So we basically, what we do is FIL to FIL, right? So we take FIL from investors, we deploy to SPs, we pay their rewards, so we take a performance fee on the investors. So that's our business. But we are incentivized by nature to actually create demand, right? So to basically connect the point between the storage paid customers with SPs. And that's the kind of demand we want to drive.
I would just add, you would think by now in this ecosystem there would be some sort of marketplace or mini marketplaces between groups, but there's still, to this day, I talk to SPs who are looking for data we're finding clients that have data that can't find SPs. So there's still this disconnect, and we're helping fill that gap and ultimately deploy FIL, right? So that's the goal.
Yeah, I think the in terms of demand, right, which was the question. Yeah, we're still seeing significant demand. I would say as of last month, we have upwards of 20 million FIL. Do a quick fourth wall break, and any FIL investors watching this, reach out. But what we don't want to do is we don't want to over leverage and centralize. When we initially started this, part of our mandate was to work with as many storage providers as we can to build a global network. So you could have, you could meet the data cap requirements, you could meet the location requirements to actually make this a robust network. The kind of negative aspect of having a lot of quality teams leave is that now it's harder to do the replicas. You also have a lot of contention around data cap, and as we understand it today, it's a lot harder for these SPs to receive it. And so now they're kind of in like a holding pattern where they're still paying fees to kind of stay online and maintain their data centers, but they're not able to seal at the same rate. But I also kind of recognize the importance of doing that because we don't want to just keep emitting FIL to teams that don't have any intention of making this like a valuable working product that's running on blockchain infrastructure. And so I think it is valuable for us to, again, continue to support data aggregators, the tooling, things that make this, again, a real product, and then really start to push FIL in those directions because we have the capacity to do so, right? Because we can vet and we can determine where that goes. And again, it's kind of centralized, but we're not the only solution out there. And so that's why we think it is really in our responsibility to continue to support those things that, again, help the broader benefit and the goals of the ecosystem.
Matchmaking. There's a lot of matchmaking on almost three sides of the market. One last question, and then we'll wrap it up because we're nearing lunch.
I'm going to ask a couple of questions. Everybody said that the location of the data was something that's important. The product market fit discussions are looking at ways, and network metrics is looking at that. I don't know of a way that leverages how we do business today where you could actually verify where the data is stored. And if you think about it conceptually, we're talking about stuff that is online on the networks, and wherever the centralized compute happens to be, that does not necessarily correlate to the physical location of the data. How important is that to you? And I'll prefix that with the notion that I've been thinking about this all week. I spent 20 years in the hard drive and storage business. I know how to divine out those immutable attributes of the storage and correlate it to the location of a sealed sector. Is it worth us developing the tooling so that you could physically verify that? Or is this a checkbox that as long as we can do as good as Web 2, it's good enough?
No, definitely. In my opinion, that's very important. Like, where is actually the data, right? Because, I mean, of course, you can look at SPs that can behave in a certain way. Like, of course, we request the data center agreements, the bills, but I mean, those are bills, right? I mean, is the data there, actually? Like, you cannot, there's no way you can actually
see. A classic example is that we looked at the infra cost for you here in Bangkok is so much higher, yet there's satellite operations that he could network into to cut his cost in half or a third. He may claim that he's doing all of his operations in Bangkok, but actually 60 or 70% of his relatively cold storage could be out of the country. And we don't have the tooling in place right now and it would still require human verification, but then you're going against the serial numbers and FRUs of all the components that go into that. We don't record that. We don't capture that. We don't associate it with a partition today. And if that's something we need to do, we need to start thinking about this sooner rather than later, because it's played into the PMF discussions considerably. We can't do it today.
Yeah. Thank you, John. I mean, really great questions and a lot of things to consider. But I think overall, very simply, we should give customers what they want. If that's what they want, yeah, sure. Here's proof that the location is here, and maybe that's PDP. If you want hot retrieval or you want really quick retrieval, if you want it S3 compatible, like all the things that we've talked about this week, we should really focus on kind of providing that. And I think in the time that I've been a part of this ecosystem and again, seeing how things evolve, we're building many great things. And I just think that we're having some trouble really integrating them and coordinating in a way where it's like, here is something that works and people will pay for. And I see that on the compute side. I see other deepened protocols that have, are earning revenues more significant than Filecoin, and they're just really focusing on like, how do we get the demand side first? And so from where we sit in terms of working with the supply side and coordinating the supply side, they are ready to go. I think everyone's ready to go. It just needs to be like, here's what we're selling, and do you want it? And if so, yes.
Is there a way that you could spec this in terms of everything we do contributes towards the cost of dollars per TIB month in some kind of way? Is there any idea that you guys could come up with that could quantify, knowing the physical location of where the data is stored is worth 2 cents per TIB month on this verified locality? Doing it globally across the ecosystem, it's not really worth it for most use cases. However, if I know how much more I can charge for verified physicality, then I might be incentivized to solve that problem.
I can speak to that, and that what you're asking for probably is only a specific market that I've seen. Meaning, clearly we have a global network, right? And there's always a concern of, just to be clear, it's like in China, not in China. The Chinese want to keep their data inside of China, and North Americans don't want to put their data inside of China. So it's almost, it could be binary at this point to solve a short-term problem. Is it inside the four walls of China for the benefit of, because they need it there? Or is it not? Because if you're sharding data or however you may want to distribute it across car files, is it not in China? So that's a simple way of probably solving it versus this geolocation, which the Spark team has talked about, and we talked about it a little bit yesterday. Proof of location is a hard problem. I mean, if you're buying export banned GPUs right now in North America and you ship it to a location and you issue the second order, NVIDIA will send out a physical person to audit to make sure it has not been shipped outside of the country. So I don't know if we will get away from physical audits, and that just may be part of the job at some point, to the extreme of if it ever gets big enough. But I understand trying to solve it at a protocol level is much better. And for anyone, so we got Dharma, Haven, websites are pretty easy to find. If you need FIL, make sure to beat them up on rates a little bit for sure. Everything's negotiable, minus the glyph rate is the joke here, right? Minus the Filecoin funds rate. So thank you very much, and let's have lunch.